Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back, everybody. So let's update our view on euro currency. In general, you could see that, well, actually reaction that we were waiting for right from the 1.0865, 1.0880 confluence has happened. And this is, by the reaction, you could see that this is the attractiveness of the strong levels. So if even later euro will turn up and break it up, the first reaction usually down, and provides great probability to out of the trade, at least with the break even, or even with some minor profit if everything will go wrong. If everything will go right, it's great opportunity to take a position here. So those of you who have taken position yesterday, there's probably now could move stops to the break even and see what will happen. That is actually stands for trading on a high time frames, on a weekly, daily basis. So this setup has started for a possible downward action. Now we just need to see what will happen based on the performance of the other markets. So if you take a look at the 10-year yield, we do not have actually any relief here. So yields are coming higher. Those of you who are watching for results of the auctions on the United States Treasury bonds, you probably already know that actually recently was the action for 20-year bonds, and it was really bad. So it was low demand. Primary dealers bought approximately one-fifth part of the all issue, and yield was around 4.6, significantly higher than it was previously. So this just indicates that bond market in the United States is a bit tiring up. So people start tiring from the big supply of the bond new issues, and that makes an impact on yield. It's also situation is accompanied with problems with liquidity and so on. So this rising on the yields is definitely some supportive factor for the dollar in the short term, and in general we now need to see what will happen with this reaction, whether it gets some continuation or not. By the fundamental view, as we already talked this week and 2 weeks ago, it's actually mostly supportive for the dollar in the nearest time. So we will see. Currently on the intraday charts, we do not have any bullish background, because if you take a look at the performance, you could see that right around the confluence we've got great bearish engulfing pattern. This is first pattern that might be reached, so market already dropped to the 30% level. Now we stand in a minor reaction. And if you would like to take some scalp position, you could watch for this pattern using minor pullback to consider taking the short position here with a downside continuation. So it might be, very often happens based on engulfing. So you very often take some kind of the A, B, C, D shape. So this might happen the same to the downside, A, B, C, D performance. So the same here was, as you can see, it's very typical for performance based on engulfing patterns. On the hourly chart, we also could consider another pattern. It's a bit more extended. So here is currently we're watching for the pullback. It already hits the 30% level. There's definitely two levels that you could watch for. First one's 1.35, next one's 1.80, 55. So this level is interesting if market will form kind of the Gartner's triple to sell. Here's probably this level needs to get some A, B, C, D retracement here. So you could split the position or wait for some precise particular levels. So that is a decision that you will need to make by yourself, how better to enter in this trade. Based on the harmony of this recent performance, and if indeed we'll get some kind of the hand and shoulders, it seems that market could reach just this first level. So because this seems a bit more extended, if of course it will be some kind of the hand and shoulders pattern. And that is actually the second pattern that you could watch for. So for instance, you could not deal with this current pullback, watch when this hand shoulders will be formed, and then try and take the position on the forming of the right arm. This is another opportunity that we currently have. dealing with this pattern. Invalidation point of all this construction stands above this area, So if market suddenly will erase this whole downside action, move above it, breaking confidence on the daily, that definitely will be bullish. Until this will happen, market keep chances on the further downward continuation, because do not forget that on the weekly chart we have bearish trend, and we consider this performance on the daily as a retracement within the downside tendency. This level is very attractive because it's strong, and that's why we have made the decision to consider taking short position around this level. So that's in 2 words that we have on euro currency. Today's Friday, so maybe we will not get some significant volatility here, some big action, but at least the major thing already has happened, that we have aimed for this week, this reaching of this level, downside action starts. Now we have updated this with some technical, tactical details on lower time frame. Let's keep going with it and see how it will develop.